You're a newcomer to Canada. Welcome! Now learn about banking in Canada. Want to be a philanthropist? It's easy. We'll show you how. And how to help your kids afford a home of their own. All this and more today on The Wealthy Life. Welcome to The Wealthy Life. Are you a newcomer to Canada? Welcome. Joining us today is Anshuman Ghosh, an investment consultant with one of Canada's big banks, to talk to us about banking in Canada. Anshuman, welcome.
Thank you, Sybil, for having me. It's a pleasure.
So I don't think you've lived in Canada since you were little, have you?
No, I haven't. In fact, I came to Canada 8 years ago from Calcutta in India.
Wow, that's a pretty big move. What caused you to move?
Well, I came as an international student, studied at Royal Roads University, and here I am.
Was that overwhelming? What was going on in your mind during that move?
Well, the first thing was, of course, you leave behind your friends and family, but I found new friends here, and I found new people, and the best part that I liked here in Victoria are really friendly people.
So was it scary at all?
Just a bit, but I think people here make you feel comfortable, and that's what I really liked about being here in Victoria.
Good. Well, it probably helps. You seem like you're outgoing and willing to meet new people yourself.
Yeah, true, and that's a good beginning, and that's what I always tell all my newcomer friends here.
Well, I think Canada is a wonderful place to live, and I know we attract a lot of new people to Canada. What are some of the things they need to think about before moving?
Well, the first thing is, of course, when you're moving to a new country, you have to take charge of your finances. And then when you come in here, you have to find a bank to start meeting your financial needs.
You know, money is involved in everything we do, isn't it?
Absolutely, it is.
So where do people go to open a bank account? How do they know what bank to choose?
Well, thankfully, we live in a digital age, so you can start right off from your country of origin. You can do all your searches with all the banks has to offer here in Canada. The good way is to start banking by going into a branch, taking an appointment, and speaking to an account manager in bank here in Canada.
Right, well, and there's one person that you'll meet immediately when you arrive. And then that one person can hopefully point you in the right direction. When it comes to banking and finances, what are some of the challenges newcomers face?
Well, the first challenge is there are different kinds of banking systems here in Canada. Typically, there are two kinds of account. One is a checkings account, the other is a savings account. In many of the countries, there might be only one account, but the checkings account here in Canada is an kind of an operational account where you take out cash, you pay your bills, while the saving is where you get a little bit of interest. But in checkings account, you don't have any interest.
Right.
But also be mindful that checking account does have fees on them, so you have to do your research. Thankfully, with most of the Canadian banks, they offer newcomers free banking for a year to start with.
Oh, that's a great way to try it out. How about credit and establishing credit being new to Canada?
Well, that's the definite big challenges, but it's also a big opportunity, because once you come into Canada, most of the big banks do offer free credit cards to help build credit.
Okay, so even if I come with a brand new history or have no credit history, I can get a credit card?
Yes, you can.
What if I had bad credit? They wouldn't know.
Well, yes, but here in Canada, you have to be very careful by using credit. And by building a credit, it means you have to pay your bills in time, you have to not overspend on your credit limits. Yeah, things like that helps make good credit history, and in future you will be able to qualify for more borrowing needs of yours.
So what about a family that is moving to Canada and wants to buy a new home? That's a little bit bigger of a credit need than just a credit card. Can they do that right away?
Thank you for asking that question. Yes, most of the immigrants, the second stage of it, once they are settled here in Canada, they want to buy their own home. And so once they have their credit, they start building the credit history, and then they have a savings account where they can start accumulating money for the down payment of the home. And then comes the mortgage, and different banks have different rules regarding mortgages. And once you qualify for your mortgage, you can absolutely buy your home in Canada.
Is there a way to fast track that? If they came and wanted to buy a house right away, is there a secret? Maybe just having more of a down payment, or?
Yeah, there are banks that have a kind of very specific programs, but that depends on different institutions and different policies that are applicable at that point in time.
Now, what about their investment accounts? Is there different investments available to them once they're in Canada versus where their home country was?
Canada does offer lots of opportunities in terms of investments. And obviously, Canada, as I have experienced myself, is very safe for investments compared to any countries that we come from. The fact is, a lot of these deposits are covered by Canada Deposit Insurance Corporation, which is CDIC, up to $100,000. And so there are registered investments and non-registered investment. As a resident in Canada, you're able to take advantage of those investment vehicles.
Great. So lots of choices. So number one tip for newcomers to Canada is get your finances set up here, because they're a little bit different than maybe back home.
Absolutely, you're true.
Anshuman, thank you so much for joining us today and sharing those words of wisdom.
Thank you. It's a pleasure.
And don't go away. Learn how to minimize portfolio risk after the break.
The Wealthy Life is brought to you by investment dealer Raymond James. Life well planned. See what a Raymond James advisor can do for you.
Does stock picking matter? Or is asset allocation the secret to consistent portfolio returns? Joining us today from Toronto is AGF Management Limited CEO and CIO, Kevin McCready. Kevin, welcome to the show.
Sybil, great to be here.
So Kevin, before we jump into the asset allocation 60-40 mix, and is that right for you, what is asset allocation?
So think of it this way. Asset allocation is just how you mix up the ingredients to make your recipe, right? So if we're at home cooking, you want a little bit of this, a little bit of that. Some of it's too spicy, some of it could be too sweet. So it's the combination of things we put together that create a portfolio, right? So when we think about it, it's stocks, it's bonds, and then we can break that down even further. What type of bonds do you want? What type of stocks do you want? What type of things work well together? What type of things may work differently? Right? So how they correlate is also important. So it's really how we take the different financial instruments that are available to us and put them together in a way that gives a client the best outcome for return with the least amount of risk. And that's really what we're trying to achieve when we think about that word asset allocation, taking those pieces and putting them together into a portfolio that we can make tactical adjustments, maybe a little more sugar, maybe a little more spice.
And of course, it's going to be different depending on each client's unique situation, their risk tolerance, and what their goals and objectives are with the portfolio.
And that's where life comes into this, right?
Yeah.
You know, if you were investing for a 2-year-old, you could say, I can take all the spice I want, right? I can take all the market volatility I want, because that child isn't going to really need that money for such a long time in the future.
Just don't give them chocolate or it'll be gone.
But versus someone who is in their later years, right, who is depending on taking an income stream off that portfolio, they don't want to be pulling money out when the market's down. So we think very differently about the recipes that we use, if you will, for that mix depending upon where someone is in their life, really.
Now, you've spent your entire career in the portfolio management world, and I won't tell our viewers how long that's been. But what are some of the things that have surprised you the most over the years?
So I guess when I look back at it, right, what I have learned is, and I have been in the industry a long time, I sat off my first trading desk in 1987. Right, so I saw something that terrified me about this industry.
And for those viewers who don't know the history, 1987 was the big crash. What was that like?
Yeah, so you had we saw a mini version of it, in March of 20, which was when, the bottom during COVID. But we had securities going down 20, 30%, in minutes, and the market was wiped out 20 30% in a day. And this went on for 2 days, right, to the point where we didn't think things were going to come back. It was probably the greatest crash we had seen since the 30s. In the markets. But what I learned over those years from all those different events, right? This is the longest apprenticeship in life. You're always learning. Every day I learn something new. And one of the fascinating things about this industry is you end up becoming a mini expert in everything at the time. So in more recent times, if you go back to March of 20, we didn't know anything. We knew a little bit about immunology and other things, but we became mini experts in vaccinations, trials, right? Some of the things that we thought about the reproductive rate of a virus.
And who knew?
Right. But you go all the way back through time, whether it be when there was an oil disaster in the Gulf of Mexico, if many remember that, where we all of a sudden had to figure out where currents were going to go and where to destroy the economy of the Southeast United States, which was dependent upon tourism. Or the Greek bond crisis, right? When they were on the brink of default, and we had to understand in this industry, what did Greek parliamentary politics play into this, and how were they going to get resolved from the European Central Bank? So you become over time this wealth of a maybe skin deep, but about a lot of things, and you never know enough. But you have to make decisions with imperfect information. But it's a fascinating industry because of the fact that you have to literally learn every day.
You do, and there's one learning that applies over all those situations you just described, and that is the markets always recover at the end of the day. They keep moving forward. So let's talk a little bit about the right asset allocation, because for so many years, the average investor thinks 60-40. I should have 60% of my money in stocks and 40% of my money in bonds, and just set and forget. Does that still apply today, and is that really suitable for everybody?
Yeah, the answer to that is pretty simple. It's no. It doesn't hold true. If you left it there every year and didn't do anything about it, it would have very different outcomes. If you think about it, it always is where you're starting from. The 90s people reference was a great year for stocks. It was. But the 60-40 portfolio did really well. It earned about 13%. But people forget it wasn't just a stock piece. It was that fact that the treasury yields were 6.4%. So as we think about the decade ahead, you have to say, where are we starting from? Where are valuations on equities? You probably won't have a 16% compounded return over this decade. And in fact, where bond yields are starting from, they're not as high as they were in the 90s. And as they move higher, it will dent the principal. So, it really does depend on where you're starting from. So it is not right for everybody. It depends on where you are in your life and how you're going to have to mix up and get that return for the 40%, I think, is going to be the hard part here.
And the good news is investors don't have to decide on their own. They can ask a professional, work with a financial advisor to find the right asset mix for them. I understand that at agf.com there's a lot more resources available on asset allocation that our viewers can have a look at. And Kevin, thank you so much for sharing your experience with us today.
Always good to be here, Sybil. Thank you.
And stay tuned. Learn how to become a philanthropist when we return.
The Wealthy Life is brought to you by investment dealer Raymond James. Life well planned. See what a Raymond James advisor can do for you.
Welcome back. Want to be a philanthropist? It's easier than you think. Joining us today is Cindy Burry, an experienced financial professional, to discuss how to support the charities you believe in. Cindy, welcome to the show.
Thank you, Sybil.
So what is a philanthropist? That term is so misunderstood.
A philanthropist is someone who believes they can change the world by one kind act at a time.
Well, I'd like to change the world. I'm sure you would too.
Yes.
So every little bit counts?
Every act counts. Yes, it does.
So where does someone get started? How do they pick the charities they want to support?
Charities, frankly, it should be a personal choice. It has to be something that kind of calls to you. Some people choose to volunteer their time to, for example, a local charity. Other people choose to gift differently. And to select a charity, it has to be something that calls to you and is close to you.
And you feel like you have a meaningful impact if you support that charity.
Correct.
So people can donate time, they can donate money.
Yes.
What are other ways they can support charities?
They can support charities through, we'll talk about the gifting of monies, because sometimes you can give to charity immediately in the year of, or you can design it so you can gift to them over time. And often, gifting over time to a charity can be beneficial.
Well, I think it's also a lot more affordable for people to give along the way.
And if you choose to give, for example, a lump sum, often when we gift through foundations, it does allow you to have deductions and some other benefits, and it can gift over time.
And why not reap the rewards now? I don't know about you, Cindy, but I like to see the benefits of my gift while I'm still alive.
Yes.
But I would like to leave a lasting legacy, as I'm sure many of our viewers would.
That's correct.
So what are the things that they need to plan for today to ensure that their money continues to give long after they're gone?
Well, I think there's 3 points. The first is have your children engaged. Explaining to them your why this is important, why you're choosing to, for example, build a foundation and have it gift in time in the future. When your children are involved, it makes the journey a lot different too. The other reason is if you have a will, if you're from, about my age group, a lot of us were raised not to share your will. Please open your will. Please review your will with your family. If you can't, the third one is to bring together your professionals, your accountants, your lawyers, your investment specialists. And again, as you design your journey from today forward, in order to carry your legacy, the people who are actioning for you need to understand your why, your passions, and what you would like. If you do not communicate with them, how would they ever know?
Yeah, and if they don't know, that can create some awkward conversations and maybe even some contesting of the will.
Correct. And surrounding yourself with professionals who also believe in gifting can be a wonderful fit.
Now, what is a scenario you can think of where things go wrong? If somebody hasn't planned ahead, hasn't had that conversation with their family or their professionals, what happens?
Well, in British Columbia, we call it the Wills Variation Act. So when someone passes and their will is reviewed, can you imagine being a family member who had no idea? No idea. So not only have you shocked your family and created potentially a division of your family, you missed all those years of that journey where you can share with them the rewards and all those great conversations when you do make the world.
They could be part of it
They
as
sure
well.
can.
I remember my dad supporting a charity many, many years ago and sharing with me the excitement he had over raising money and giving it to that group. Well, it inspired me to start giving to that group as well.
And sometimes people give to charities, maybe they've helped them out in the past during a hard time. So as a parent, if you share those stories with your children, it's just not about the gifting, it's also about your life story. So be transparent, bring your children on board, surround yourself with others, make sure you're doing this in the most beneficial way to you. And when your last day is here, your family will continue forward because they know your story.
So based on how you described a philanthropist and all these ways to give, you don't need to be rich to be a philanthropist.
As we've discussed, you can give $2 at the cashier in the grocery store. That's a small step forward.
Yep, just every little bit helps, or even your time if you don't have the money.
Correct.
But planning ahead is key for a couple of reasons, not only to see the benefit and make sure you don't have those awkward situations, but is there some tax benefits people could receive?
Huge tax benefits. Philanthropists give because they want to make the world a better place, and unfortunately not all of them realize that they're leaving a lot of tax credits aside. So I have philanthropists I work with who don't want the credit, so I suggest they increase their donation based on the credit.
But good planning can make sure that you minimize your taxes and maximize the gift at the end of the day.
That's correct, Sybil.
Oh, Cindy, thank you so much for being with us today. It's been an absolute pleasure.
The pleasure is mine, Sybil.
And don't go away, because up next, learn how to help your kids buy a house.
The Wealthy Life is brought to you by investment dealer Raymond James. Life well planned. See what a Raymond James advisor can do for you.
Welcome back. Thanks for your letters, emails, tweets, and messages. Today's question is from Christoph. Dear Sybil, housing prices seem to be so high, I don't think my kids will ever be able to afford to buy one. I'd like to help get them started, but have limited funds myself. Do you have any suggestions? With gratitude, Christoph. Well, Christoph, I'm a big believer in home ownership. It's a great way to build wealth over time. It's like a forced savings program. You need somewhere to live anyway, so why throw your money away at rent when you can pay yourself first? That being said, there's two main things to consider before buying a home. Where are you going to get the down payment, and can you afford the monthly payments? And I think this is what's causing you a little bit of worry when it comes to your kids. Well, good news, there are 3 ways that you might be able to help your kids get started. Number 1 is you could give them money. Number 2, you could lend them money. Or number 3, you could partner with them as an investment opportunity. Now, before you give them money, you need to make sure your own needs are met first. Do you have enough to retire when you want to? Can you meet your lifestyle needs for the rest of your life? If so, then maybe you have a little bit extra to give them. But work with a financial planner to have the answer to that question before you give your money away. The second opportunity is maybe lending them some money. If you own your own home, maybe you have enough equity in your home that you could borrow some money to lend to them. They could make those payments back to you over time at maybe a preferred interest rate, and that'll give them the little help they need. Or number 3, partner with them. Put your name on title. And that way, you are now earning some wealth creation opportunities yourself while helping your kids out. Now, of course, there's some legal and there's some tax implications, so make sure you talk to a professional before you take action. And that wraps up this edition of The Wealthy Life, helping you make smart financial decisions. Join the Wealthy Life Club and you'll get access to everything you need to live your version of the wealthy life.